4.1% is the number, Anthony, right in line with expectations. Good to see you this morning. Your reaction to the GDP, 4.1% growth.
I think that's a great number. It really shows that consumers are getting energized, getting a little bit more consumer confidence. We'll have to look at the details. Obviously, the net exports were going to be strong. A lot of countries trying to sort of get a jump start ahead of the tariffs, so that was boosted a little bit there. Then we'll have to look at the inventories to see what happens to the next quarter.
So you want to look at inventories. What about business spending? Is that a component that you are focused on in terms of giving us a window of where we head next? As you see, markets have turned around, and now we're looking at a gain on the, well, it's back and forth, so it's unchanged right now. But tell us what's most important about this number right now, Anthony.
I think the important thing is to look at these things not only just in a given quarter, but certainly over multiple quarters. I think that certainly the instant expensing of business investment will boost capital spending, and that will in turn boost productivity growth. As you know, Maria, that has been one of the things that has held down economic growth, and now giving a shot in the arm to encourage business investment will definitely give a shot in the arm to productivity, and I think that will help elevate the growth rates for real GDP moving forward.
And Dagan, you've got details now as we're looking and zeroing in on this number. What strikes you about this 4.1% report?
Well, one thing that we should note is the fact that the estimates by a lot of economists after the durable goods report yesterday started coming down. That Atlanta Fed number that we watched so closely had been lowered to 3.8%. So this number does come in higher than that. And we had other economists that were projecting close to 5%. They had lowered it to about 4.5%. But again, this is still such a solid number. This is the first time that we've gotten growth for any quarter above 4% since the third quarter of 2014. So nearly 4 years. It's been that long since we've seen a 4 in front of quarterly growth. That's that's something very important to note.
Just want to also point out that the first quarter GDP is being revised upward. It was at 2%. Now it's 2.2%. A revision on the first quarter GDP, Anthony Chan. We were looking at a good quarter as it was, but now they're saying first quarter GDP revised upward.
That certainly helps the yearly numbers. As you know, Maria, this was a report that was going to revise all the way going backwards. So it's not just one calendar quarter, but it's a multiple number of quarters that are going to be revised. That gives you a very good idea of where the economy is going to go, because the first quarter had been originally revised down. Now it's coming back. That will give you a little bit of a boost. It looks like this year we're going to come really, really close to about a 3% growth when all is said and done, if this trend continues.
That's going to be the first time in a long time, James Freeman, for 3%.
Yeah, kaboom. This is huge news. This is now kind of officially the end of the new normal 2% sluggish growth era. This is 12 months of better than 3% growth. This is what the White House was hoping for, what everyone was hoping for. And we talk about these numbers. This is more jobs, more opportunity for people in this country. And millions of people who looked for work within the last few years, but maybe weren't looking this year, we know they could rejoin the labor force. Maybe they will now. It's just fantastic news to see that we've turned a corner.
And
go ahead, Anthony.
And one thing, Maria, that's really important about this number is that it's real in the sense that consumer spending coming in so strong, giving you a 4% number. You can look at other components and quibble about them, but when you see consumer spending this strong, that's impressive.
Well, that's a really important point, because the consumer has been debatable, right? I mean, earlier in the year, we were looking at a consumer that perhaps was saving more money than they were actually spending. Are you saying that's changed?
I think it has, in the sense that in the first quarter, you got only about a 0.5% growth in consumer spending. That's 2/3 of the overall economy. Remember that confidence on the part of the consumers is what drives this economic growth. And then when businesses see that consumers are excited, guess what? They're even more encouraged to spend more, and that in turn boosts productivity and boosts the underlying growth trend of the overall economy. So I always look to see what consumers are doing, because that drives the future path of real GDP.
Of course, 2/3 of economic growth, consumer activity. Dagan, how do you see it?
Trade played a big part of the second quarter number. Net exports added more than 1 percentage point to the 4.1% GDP growth that we got, 1.06 percentage points there. Some of that would have been buying by overseas trading partners of soybeans ahead of these tariffs, these retaliatory tariffs that went into effect in the beginning of July. That was after the end of the second quarter. So we're going to have to wait for the third quarter GDP to really find out the impact of this trade fight as it picked up steam moving into the month of July. So, again, it was maybe buying that was pulled forward into the second quarter, and then that will be buying that isn't present in the third. I would just note that.
Yeah, good, important point. Morgan Ortega, the president likes to say economic security is national security and vice versa.
Yeah, absolutely. I mean, this is exactly what he ran on. This is what he pledged to the American people, that if you don't elect a politician, if you elect someone from the business community, Maria, that we're going to get to exceptional growth. And this is what Republicans said, you know, over the past 8 years. Sure, the economy grew, but very marginally. We did get out of the Great Recession. But when you unleash the powers of the business community, it's not just about tax reform. It's also about, and you've talked so much on your show, Maria, about the expansive regulatory reform that's gone on. And so businesses feel on fire again. I think that this number, it's important for the economy. It's a huge blow to Democrat socialists. But I think more importantly, it's putting the politics aside, it's good for America. It's good for mom and pop shops. It's good for corporations. This is a great day for the Trump presidency.
What do you look for next, Anthony Chan, in terms of another window into where we're going? The administration's talking about tax plan 2.0. It's questionable whether or not that passes in the Senate right before the election, in the midterm election, of course. But do you see more stimulus coming? What are you going to be focused on post this GDP number?
Well, one of the things that many people are not talking about is that when you look at employment, for example, you've been seeing more and more people coming from out of the labor force into the labor force. So a lot of the new jobs that are being created, not so much from people that are unemployed, because that pool is so small, but people that are being pulled out of an area that was people that were not in the labor force. So I look for that to continue to move forward, and I look for confidence to continue to support the overall economy. So those things, I think, are in themselves quite good in this form of stimulus. And then I'm hopeful that we'll get some more positive progress on the trade front. We got some good news yesterday from Europe. Maybe that will spread into other parts of the world, and that will even give more business confidence so that this growth and momentum continues a bit further.